Hi dear students, this is CAT course offered by St. George's College, Advitra. This is paper 1, Fundamentals of Financial Accounting, video session number 7. In this session, we are going to discuss about what is the accrual basis and what do you mean by cash basis of accounting, what do you mean by hybrid method, capital and revenue transaction, what is capital expenditure, what is revenue expenditure, and what is deferred revenue expenditure. So let's move on to the basic contents. Let's discuss first about what is the accrual basis and cash basis of accounting. I think in the earlier videos we have already discussed about what do you mean by the accrual concepts. So what do you mean by accrual basis? Accrual basis means all the transactions are recorded into the books of account as and when it is taken place in the business. We are not at all considering about whether the cash is received or not. Such type of transactions are known as the accrual transaction, or such type of recording is known as the accrual basis of recording. So in this method we are recording all the transactions. So we are not at all considering whether the money is being received or not. All the transaction we already have discussed what is a transaction. It is an event which is measured in monetary terms. So all the transactions, whether the money is received or not, is not at all considered. Such type of recording is known as the accrual basis of recording. So it will be reflected in the books of account as and when they occur, or as and when they accrue into the business. So the legal liability is being created, but the amount will be paid only in a future period. So it is related with the considerations relating to deferrals, related with allocations, related with depreciations, and with the amortization. So these all transactions will be recorded, and that recording is done as a result of the accrual basis of recording. So as per Companies Act 2013, earlier it is 1956, all companies are required to maintain books of account on accrual basis of accounting. So which is the standardized method, that is the accrual basis. Now it is Companies Act 2013. In the 2013 also there is no revision. All the accounts are to be prepared on accrual basis. Now let's see what is cash basis of accounting. In cash basis of accounting, the transactions can be only recorded into the books of account if the money is either received or the money is either paid. Then only the transactions can be reflected into the books of accounts. That's why we call it as the actual receipt and the actual payments. If it is actual receipt in the form of cash or actual payment in the form of cash, then only the transactions can be recorded into the books of accounts. So that is the basic difference between the cash basis and the accrual basis of accounting. Now let's see a differentiation between the accrual basis and the cash basis. So let's see the prepaid, outstanding expenses, etc. in the balance sheet. So in accrual basis, all the things can be recorded into the books of account, like prepaid expenses, outstanding expenses, accrued expenses or outstanding expenses, or accrued incomes, etc. Everything can be recorded. But what about cash basis? These items cannot be recorded if we are following a cash basis of accounting. Then what about the higher or lower income? We can say that definitely it will show a higher income, because all the transactions, even though it is not received in the form of money, it will be recorded. But what about the cash basis? If we are following cash basis, our income values will be comparatively low, because if the money is not received, it will not be recorded into the books of accounts. So there will be only a lower income. And what about the outstanding expenses and outstanding income when it is related with the higher income or lower income? Definitely we can say that there will be only relatively lower income, because the money is not actually received, therefore it is having only a lower income. Here the income will be generally high, because whatever is received in the form of cash. right? Everything received is generally received in the form of cash, therefore the income will be true income, and also the income will be high. And what is recognized? It is recognized, or the way of recording is recognized by Companies Act 1956, but the cash basis of recording is not at all been directly derived by the Companies Act 1956. Now it should be restated as 2013. And here the accountant is having certain options how to record the transactions, but here there is no option. If it is received in cash only, then it could be recorded. So there is no option for the accountant. So that is the basic difference between the accrual basis of accounting and a cash basis of accounting. Now we are moving to the next basis or method of accounting, that is a hybrid method. In hybrid method, you can follow the two methods simultaneously, which means we are following cash basis as well as we are following the accrual basis. If these two methods are simultaneously used, then that method is known as the hybrid method. So the incomes are recorded on cash basis, but the expenses are recorded in accrual basis. So that is the hybrid method. All the incomes are only recorded if the actual amount is received. So cash basis is followed, but in case of expenses, if it may be received or if it may not be received, a legal obligation is created. All those cases the expenses are recorded. So this is based on the concept of conservatism. So such type of recording are as a result of the conservatism method. So we know already what is the concept of conservatism. Now we are going ahead with a example. There is a question to calculate the value for the net income for the business on cash basis and accrual basis. So let's see the example. So the fees received is 60,000, then salary paid to staff 8,000, rent paid is 14,000, magazine and journal fee is 1,000, traveling and conveyance fee paid is 3,000, membership fee 1,600, and office expenses 10,000. So let's see about how to calculate net income in cash basis. If it is in the cash basis, if it is actually received, then that could be recorded, and if it is actually paid, that also could be recorded. No type of outstanding items, prepaid items, that will not be recorded. So we know there is an additional information also is given, like fee include 3,000 in respect of 2019. So these all transactions related to 2020, but there is an outstanding item in the previous year that is paid in the current year, and fee not yet received, again outstanding item 7,000. Then office rent includes 4,000 for the previous year, and the rent 2,000 not yet paid, outstanding. Membership paid is paid for 2 years, that is paid in advance, prepaid. So such items are there. So if it is cash basis, definitely these items could not be included. These table items only can be included. So you can see fee received, that is receipt, so this should be added. Salary paid, that is a payment, it should be deducted. Office rent paid minus, it should be deducted. Magazine fee, it should be deducted. Traveling and conveyance paid, deducted. Membership fee paid, deducted. Office expenses paid, deducted. So from 60,000, the total of this is to be deducted, then that becomes the cash basis. So let's see the answer. Fee received is 60,000. All other items in 2020, that should be deducted because these are payments. So the total of that is 37,600, and the remaining amount is our net income, that is 22,400. So that is very clear. Now let's see the answer if we are following the accrual basis. So here also there is no change. The fee received is 60,000, which means the actual receipt. But there are certain fee which is related or which is outstanding relating to 2020, that is 7,000. So what we know, that is to be received, so that is to be added. And there is something which is related to the previous year, which means that is not the income which is related to the current year, so that is to be deducted. So 7,000 is added and 3,000 is deducted, and the net value will be 64,000. and about salary is there 8,000, that is to be deducted, and about the office rent outstanding is there, that is to be added, and of the previous year is there, that is to be deducted. So the net value will be 12,000. Then for magazine it is 1,000, traveling and conveyance fee 3,000, and membership fee also there is advance payment, that is not related to the current period, so that is to be deducted. So the remaining amount is 8,000, and the office expenses is 10,000. So if an income or an expense, if it is related to the current period only, then it could be added, and if it is something related to the previous year or in the upcoming period, that is to be deducted. Only the current period items are to be considered, that is only to be added, other items are to be deducted. So such adjustment if it is made, then that is known as the accrual basis. So in the accrual basis, our final answer will be 29,200. So this example is given just to identify that what will be the changes that happen if we are following accrual basis and also if we are following cash basis. There are many other examples given in your textbook, so you should refer those examples and identify what is the difference between accrual basis and cash basis. Now we are moving to the next topic. How can we convert the cash basis of accounting into accrual basis of accounting? Why we are dealing with this topic? Because we have already said in Companies Act we are following, all the companies are directed to follow accrual basis. So that is the standardized method. We are not allowed to follow cash basis of accounting. So if a business is following cash basis, how can we convert it into accrual basis? So at first it is necessary to ascertain what are our outstanding items and what are our prepaid items. So that is the first step. The company should identify all of their outstanding items and their prepaid items, and we should pass certain journal entries. So see the journal entries, how to convert the cash basis into accrual basis. There can be certain accrued income and their prepaid expenses. These two items are to be debited, and the credit goes to P&L adjustment account. So the account which is used to convert the cash basis to accrual basis is the P&L adjustment account. That is to be noted. Okay. So the P&L adjustment account is used to convert the cash basis into accrual basis. Now if it is income received in advance or outstanding expenses, then these items are to be credited and the debit goes to P&L adjustment account. And if there is profit resulting out of the adjustment, then P&L adjustment account enter to capital. Anyway, one of the aspect will be P&L adjustment account. So the basic idea that you should derive is P&L adjustment account is used to convert the cash basis of accounting into the accrual basis of accounting. Now let's see the next topic, that is capital and revenue transactions. So we are first discussing about what is a capital expenditure. So capital expenditure here means, what is the word meaning of expenditure? This will be an actual money moving out, right? So the capital expenditure here means the expenditure which is related with the acquisition of an asset. Okay, acquisition of an asset. And the main advantage is that the benefit of it will be received for more than one accounting period. So if an asset is bought, then the benefit or the income generated can be for a longer time period. So such type of expenditures are known as capital expenditure. So the benefit, the business can enjoy its benefit for a longer period, which means more than 1 year. Such type of expenses are known as capital expenditures or capital transactions. Now let's see some of the examples of capital expenditure, like purchase of land, building, machinery, etc. Benefit will be received for long time period. Then cost of leasehold land and building, benefit received for long time period. Then you purchase goodwill, right? The goodwill of the company will last for a long time period. Then preliminary expenditures like the initial expenses that will be derived for a long time period. So all these expenditures are considered as capital expenditures where the benefit is received for a long term period. Now coming to the revenue expenditure. Revenue expenditure means for meeting the day-to-day expenditure or the running expenses of the business, but the main indication is that the benefit will be received only for 1 year. So the time period is very important. If the benefit is received only for a short time period or for less than 1 year, then such type of expenditures are classified as revenue expenditure. So this is basically for the day-to-day or meeting the running expenses of the business. Now let's see what are some of the examples of revenue expenditure: salaries, wages, rent, depreciation, payment for the raw materials, insurance premium. So basically you should think how much time period you will get the benefit. If it is for a long time period, it will be classified as revenue expenditure, and if the benefit is received only for a short time period, it will be classified as the revenue expenditure, and if it is for a long time period, it will be classified as capital expenditure. And moving to the last topic, that is known as the deferred revenue expenditure. So deferred revenue expenditures are expenditures in which the payment is done for a particular period, but the benefit of it will be received for a larger period. Such type of expenditures are known as deferred revenue expenditure. So these represent certain type of assets whose usefulness does not expire in a year, but it is generally in a near future, which means a long term investment done in the advertisements. So we know advertisement expenditures may be usually classified as revenue, but the benefit can be received for a long term period. Such type of expenditures are known as deferred revenue expenditures, and the speciality of deferred revenue expenditure is that this can be carried forward for a long term period, and it is written off also for a long term accounting period. So heavy advertisement expenditure, take an example, advertisement expenditure 1 crore. If this 1 crore is being recorded into the book of account in a 1 year, then definitely the balance sheet will be showing a negative figure. The P&L account will be having a huge loss, right? So we will not be writing of 1 crore in 1 year. Suppose the advertisement may be for 5 years. So the entire expenses will be recorded or distributed over 5 years. So such type of expenditures are known as deferred revenue expenditures. There is an example given about an insurance policy, and we know we will be spending a huge amount for insurance policies, but the benefit may be received for a longer period. So definitely what we can do, we can write off the amount of insurance premium over the life period of that particular insurance premium. That is an example. Okay, so these are the topics which we have discussed till now. There are a lot of examples given in your textbook. You should go through the examples and have a clear clarity about these topics. Okay, thank you for listening. We can watch in the next video.